Welcome back to another episode of the Wealth Building Strategies podcast. I'm your host, Jeremy Constantino, and today I'm super honored to have on it as a guest, Schuyler Cadwalader. Schuyler, welcome to the show.
Thanks so much for having me, Jeremy. Really appreciate it.
Yeah, so for those of you that don't know Schuyler, Schuyler's a co-founder, managing partner of UpWealth Capital. And UpWealth Capital is a real estate private equity group that helps medical professionals build passive income through multifamily real estate investing. So welcome again, Schuyler. And I'm really looking forward to talking about your story and how you got into real estate investing. And let's just jump right on in. So what's your background and how did you get into real estate?
Yeah, so I've always been really right next to real estate investing as a multifamily architect by training. So I've known many developers, many very successful people in real estate. Interestingly enough, my father-in-law actually owns good 340 doors outright. Wow. As well. So I've always been around it and just never really participating in it meaningfully myself. And but yeah, over the years as a multifamily architect, I'm working for all these developers and kind of slowly started realizing that I was on the wrong side of the table. You know what I mean? You never get to participate in the upside of these deals, right? You never get equity. You show up to work, you do the work, you get paid for that work, you go home, no more work is being done on your behalf when you're gone, right? And that's kind of the trap I realized, I think that most of us realize we're in, especially as we approach sort of midlife and sort of realize that got a lot more obligations. I've got one daughter, another kid on the way, actually coming on Friday. It's a scheduled birth.
Whoa.
So
Congratulations.
So thank you. No, very exciting. And, I think all of us get jobs and then later in life realize that those aren't high leverage ways of earning wealth. In fact, they're no leverage ways. It's a direct one-to-one trade. And we need to figure out how to get a 1-to-2 trade, a 1-to-5 trade, a 1-to-10 trade. And that's kind of when I decided to get involved on the equity side as well.
Yeah, that's similar story to me. I worked for oil and gas company Chevron for 14 years. And the same thing. I had a job, it was a good paying job, but I did what I was told. But yeah, I did not have upside in any of their oil and gas production and exploration, and they're crushing it.
Yeah. And it's kind of amazing because as an architect, you work these long hours. Sometimes you put together these presentations, you go so hard and then you present it. Someone shows up in their Porsche, looks at it kind of while they're texting about another deal, tell you to make everything cheaper and storms off. And you're just like, man, that seems like a better place to be.
Oh, man.
So, yeah. So we basically, I had already decided that real estate was the way to go. And I wanted to do multifamily because I was familiar with it. I saw a lot of people building wealth in it, both personally and professionally. And we basically, it's also just easy to understand, right? If like tomorrow you just pointed to a random stranger, said you have to become a real estate investor tomorrow, everyone's been a tenant, right? In, an apartment. And so there's already this intuitive sense of how it works. Also, obviously, everyone needs a roof over their head. So there's kind of like, there's something to be said for, an investing typology where people really do need it, right? Gas is kind of similar, right? Well, maybe someday we won't need gas, but for the time being, we very much need it. Everyone does. And so basically, I had switched to part-time in early 2020 with the idea that I'm going to buy an apartment building. I'm going to get real estate professional status. And I can explain what that is if you think the listeners need that. And then hopefully we can buy something big enough that I can do a cost seg study. My wife is actually a physician, and we were like, well, maybe we can use those losses to knock down our taxable income and therefore maybe not fully make up for my salary, but get really close to it and get our foot in the door and get the ball rolling.
Nice. Yeah. I like what you're saying, the simplicity of real estate investing, multifamily. And that's also what attracted me to real estate is working for oil and gas. There's a lot of nuances. There's a lot of high technology, and you're drilling wells miles deep under the ground. You have no idea what's going down there, and you use seismic, and there's just all kinds of witchcraft type things. You're like, but I can understand.
Yeah.
Somebody living in an apartment complex and paying rent every month. Like, that's so tangible, so easy.
Yeah, totally. And you kind of have a pretty intuitive sense of where the risk is, right? Like obviously, fires or evictions and all that. And they're all things you can kind of underwrite for and
Right.
bake
Right.
pretty easily. Whereas, yeah, I can't even imagine like exploring for oil. That's about as tough as it gets, right? And
Right.
this is sort of a similar story there with development. Ground up has a lot of
Yep.
risks that are hard to see coming as well. Jurisdictional risk. I've seen crazy things happen on job sites where inspectors come and say, "Hey, make all these changes." You make them, they come back a month later and they say, "Hey, change it back. I never said to do that." And you're just like, "This is crazy." So, I have not seen a whole lot of properties come in on time and on budget in my, in all the different firms I've worked at. So that's always kind of scared me, even though there's a part of me that wants to get into development, and that may be in the future at some
Right.
point. I thought a great place to start was, use the KISS principle, keep it
Right.
simple,
Right.
stupid, and,
Exactly.
build a strong foundation first
All
with
right.
multi.
So what took place during 2020?
Yeah, so it was a well, it was a weird year, as we all know. I basically had switched to part-time and we were looking in our hometown of Buffalo, New York for properties. It's not like a market I'm in love with, but it's a market I understand intimately enough. And I actually figured, that's probably more important than anything at this point. I didn't want to make a big mistake just buying in a market I didn't know very well. And there's so many to choose from. And I also was like, well, we go home a lot. I'll be able to write off our trips home. Anyways, we eventually I spent like almost a little over a quarter looking and making offers and losing, and it was kind of discouraging. And we finally got an offer accepted for an 8-unit property, which was actually bigger than what we were really looking for. We just kind of threw that one out there and got it. And that was exciting, but also a little bit terrifying because it just meant a lot more of our capital is going to be getting put towards
Right.
that. We were looking at duplexes, so I was like, okay, we're 4xing what we thought we were going to invest. At the same time, due to the pandemic, my company went out of business, so my part-time thing just came to a screeching halt.
Well,
And basically, at the exact same time, we got this property under contract, and I was like, okay, maybe this is, I don't know, I'll take it as a sign from above, so to speak. But it was really tough because my wife, as I mentioned, was a physician. We're in Seattle. Seattle was the eye of the storm when COVID first came and when no one really understood it at all, and we were in full freak out mode. She was pregnant, and it was just really
oh wow.
stressful on our family. My job was gone. An enormous amount of our liquidity was about to get tied up. She was, dressing, like it's the end of the world and going to work every day, hoping that our first child would be safe, right? Which
Yeah.
no one could tell us was the case, right? So we kind of just realized, in many ways, all of this was just, fuel on the flame of our need to create more sources of income and
Right.
build wealth,
Right.
and we closed on the property around the same time that the baby was born. We wound up going back to Buffalo and staying with family for a while because I didn't have work. My wife was on maternity leave, and I spent a lot of hours working on the property, getting it up and running. Wound up doing a big cost seg study, wrote like 170,000 off our household W-2
Wow.
income, which
Wow.
worked, and got a giant tax return in early 21. And it was like, there it is. It works. You know what I mean? And
Uh,
so we've been basically pedal to the metal ever since.
wow, that's fantastic. Quickly explain. I know there are
Yeah.
some viewers out there that do not understand cost segregation and how you are able to reduce your taxable income by $170,000. Just that's
Yeah.
massive. I guess quickly explain that.
Yeah, so there's two main components. There's the cost seg study, and then there's also you need something called real estate professional status. So not everyone who has a full-time W-2 job can do this off of their W-2 income. It's fairly common if you have one person in a household who makes a lot more than the other for the other to say, okay, this actually starts to make sense. But to get real estate professional status, it's basically an IRS tax designation. You need to spend 750 hours a year, basically on your real estate business, being actively involved in managing real estate investments. So you can't, I don't believe, talk to your CPAs and everything, that as an LP investor, you can like
Right.
log real estate professional status hours. So by buying this building, I was able to accumulate enough hours to get real estate professional status. So that's step one. Step two is the cost segregation study, which basically, you know, typically the way it works with the IRS is you can depreciate the full value of the building, not the land, just the building, over 27 and a half years. And so that's a great advantage of real estate. You know, it's a quote unquote paper expense. It's kind of a real expense at the end of the day, but we'll just call it a paper expense. And you can it basically makes a lot of the income that's the property is throwing off tax free. Basically,
Right.
it kind of like makes up for that. So 27 and a half years is a really long time. A cost segregation study, what's great about it is you can have someone come in and basically, instead of just using that rule of thumb, take the value of the building, divide it by 27 and a half, they actually look at the windows and all the different parts of the building and assign a time frame to those. And basically you're compressing that schedule from 27 and a half years to something much shorter. And generally speaking, in the first year, you can take a massive loss, paper loss. And if you have the real estate professional status, awesome. You can throw that right at your W-2 income and you basically get, you know, a much juicier tax return as a result.
Yeah, so I'm glad you're explaining this because we have a lot of realtors that listen to my show. So I'm co-owner in multiple franchise offices at JPAR Real Estate, and we have about 300 agents in my offices, and JPAR is about 4,000. But anyway, my target audience is realtors. And it's a shame that not many of them are investing as LPs in the real estate
Yeah.
syndication. So that's my primary reason for having this show is getting them excited and awareness of investing. And then now you're talking about a special perk because they already have that real estate professional
Yeah.
status. So
Yeah, no, it's a great point. It's always been kind of funny to me because we all have our own perspectives on this, but I always sort of when I'm talking to realtors, I'm always amazed at how few of them are
right,
investors
right.
because they have the best visibility into their markets. They are the first eyes on a lot of the best deals out there.
Yep,
And they've obviously got lots of long-standing relationships.
yep,
And so, yeah, I mean, if you already have real estate professional status, it's almost crazy not
yep,
to take advantage of it because
yep,
that's the hardest part, right?
yep.
Because most people can't. The law is actually a little tricky. You can't. It's not just that you have to work 750 hours. It's at least 750 hours or more hours than on any other job.
Right, exactly. Yep.
So if you work a full-time job, that means you're going to have to convince the IRS that you also spend 40 hours a week managing real estate, which that's going to
Exactly.
be a tough sell. I wouldn't recommend that.
Exactly. Well, let's kind of just go into why you like multifamily investing.
Yeah, so partly because of what we spoke on earlier, it's easy to understand. I find it incredibly reliable. Obviously, if you buy in the right markets at the right prices, it's a little bit dummy proof, you know,
Mhm.
and I don't want to overstate that because you can make a mistake in any asset class, obviously. There are overpriced properties everywhere. In fact, that's almost all you can find these days. Um, but it does come back to the simplicity and again, the necessity of it.
Right.
You know, I mean, multifamily provides human shelter, you know, from the elements. Like on a very primitive, basic level, this is something that everyone will pay for first before paying for anything else in their
Exactly.
lives.
Exactly.
And I think the 2020 or the COVID pandemic basically hammered this point home better than anything else could have because I don't know if you're reading about what's going on in office right now, but it's really scary. And I think that party is just getting started. And over the next 6, 12, 18 months, we're going to see a lot of pain in office. NOI down, interest rates up.
Yep.
That's just a bloodbath. And so retail, right, took a massive hit. I think you know, there are other places that have held up fairly well. You know, I think industrial is kind of exciting going forward, especially as we try to get more of our supply chain onshored again. But multifamily held up incredibly well. I remember even with the eviction moratorium, it just never happened for us. You know, everyone just continued paying their rents. I know some people, you know, felt that a little bit, and oftentimes they wound up getting kickbacks back from the government anyways to make up for it. So it was like it was temporary pain anyways. So yeah, at the end of the day, and also as someone who worked in architecture, who sees the constant ratcheting up of regulations when it comes to building new housing, whether that's environmental
Mhm.
code, building code, zoning. It seems like it's just going to get harder and harder and more bureaucratic, which means more and more expensive to build more housing. Basically, going forward, there really doesn't seem, I don't see a whole lot of reason for optimism here. You see a few things passing. I know down in San Diego, and up here, you're going to be able to, throw an extra unit or two or four on single family zoning in some areas, but that's not, the scale
Right.
that's going to create solve the sort of housing crisis, I think, in this country as a whole. So I just see constrained supply being a problem for the foreseeable future in multifamily.
Yeah, it's the attitude of not in my backyard.
Yeah, yeah, the NIMBYism is incredibly strong, and especially out here on the West Coast. I mean, if you look at a map of Seattle, it's either the Sound, a lake, there's a little bit of land, and then there's
Yep.
really jagged mountains. I mean,
Yep.
there's just like not that much room, and that's what a lot of California is like too. You add NIMBYism to the geographic challenges of the
Right.
area, and yeah, it's just going to be expensive.
Excellent. Okay, we were talking earlier about medical professionals. I think you wrote to me, medical professionals don't win at investing. So your wife's a medical professional. So
Mhm.
talk about this perspective of what's going on in the medical world as far as investing.
Yeah, well, medical professionals are really smart people. I think that goes without saying. That's like the stereotype, and it's true, and it's that way for a reason. But they're very linear people. They're very by the books. They're the smart kid right in school, and they were able to project a career path because you basically everyone who I know who is a doctor wanted to be a doctor in high school.
Yeah.
You know what I mean? They said, okay, I need straight A's starting today. And they did it. They got the straight A's, then they got to the good school, they got straight A's again, and they basically played out they're basically following a recipe. It's like a cookbook, right? Where it's
Right.
just like at first I do this, then I do this. But the problem is that the other stereotype of the doctor is once you're a doctor, you've made it. You can get the nice car, you can get the nice house, you'll have the beautiful family, and your life is relatively easy compared to most people. There's an element of truth to that, but the flip side of that coin is a lot of doctors get to be doctors and immediately make some pretty critical errors, like buying the house that's a little too big, like getting the huge car payment,
Mhm.
and as much as that seems sustainable at first, right? You're an attending for the first time in your early 30s, maybe you don't have any kids yet, you're pulling up in the Tesla with the Rolex on, feeling pretty good about yourself. And then the reality starts compounding on itself. You get married, you have kids, taxes go up, whatever. All these. We all know that life just gets more expensive, right? It feels like every day almost. I'm amazed when I look at a receipt when I leave Costco these days. Um, and so all of a sudden they unknowingly built this sort of really challenging life for themselves, even though they're making a lot of money. You can you can burn through it all like that. Everyone's happy to take it from you, right? And so, and then I think the trap is they start working extra hours. They start doing a little overtime here and there. Keep in mind, like my wife, when she works, it's 7 on, 7 off, 12 hours a day, sometimes nights, so 7 p to 7 a. So this isn't really like a lifestyle that's sustainable for most people. Not all doctors have that type of schedule, but they work really hard to begin with. So you start doing that extra work just to kind of like make ends meet, and save up for your kids' college and make sure the retirement accounts are covered. That's that is a recipe for disaster in the long run. Burnout is pretty much an inevitability at this point. And right now, there are lots of studies out there showing that doctor burnout is basically through the roof and has
Right.
actually, I believe, has gotten worse since COVID, which is kind of amazing because you'd think it would spike and then kind of calm back down, but it's actually still getting worse. And the problem I think that a lot of doctors have is shouldn't say the problem, but the default setting that a lot of them have is, okay, what's the formula I'm supposed to be following, right? Because they're formulaic and the formula got them to where they are. And the formula, of course, for them is, don't overthink it, max out your 401k,
Yeah.
max out your mutual funds,
Yeah.
just put as much money into the stock market as you possibly can until
Yep.
you're in your 60s, and hopefully you'll be okay. And that's basically it. the idea of financial freedom or like incremental retirement or investing in alternative assets, those aren't common topics in that
Right.
community. I think that's changing now,
Yep.
but I think most people, they get going and they say, what's the most tax advantage way to invest? And they think that's a 401k. So they go all in on that type of stuff. Meanwhile, they're having to work overtime basically for the foreseeable future.
What's what I see amongst real estate professionals, realtors, is they don't even know of a thing called accredited investor, and so
Yeah,
they
right.
have they have no concept that they now qualify to invest in some very lucrative or very unique opportunities. So is that similar with the medical professionals, that they don't even know the concept? Oh, I'm an accredited investor, so therefore I can invest in these private equity deals.
Yeah, that's a really great point. I mean, I think that's the funny thing, especially people who don't come from wealthy families, obviously, but our first generation doctors and all that. Um, Most people don't know what private equity even means,
Right.
right? Really, they hear it and they're like, "Oh yeah, that's like, was that that's like a hedge fund or something?" I don't really know. Who cares? I know I'm not involved. I don't get to play. So yeah, I
Right,
think most
right,
people don't know
exactly.
what accredited investors are. They don't even know what private equity is.
Right,
Um, I think I Googled it once, and I think it's only like it's between like 6 and 8% of Americans are accredited investors. So
yeah,
it's actually like a tiny minority. Most people most
right.
people, most of us know, unless you're really at the top, and everyone is loaded, but that's not most people. We're not having these conversations.
Right.
You're not getting exposed to people who are like, oh, my oil and gas LP position is really paying well. That's not even English to most people. So yeah, a lot of doctors just they literally just don't know, and they just need a little guidance.
Right, right. So let's roll right into, and something else that you wrote was talking about personal sovereignty and why that should be a goal for, good medical professional or even a W2 employee.
Yeah, well, I think when you're young, everything is about go get a job, go get a job. Like get a good paying job. There's a saying, do what you love and you'll never work a day in your life. I think that's one of the most bald-faced lies that has ever been said. It's just not true. If anything, it's like do what you love, and you will be made not to love it anymore eventually. If you need it, right, every single day, like if you don't have the ability to say, you know what, I'd like to just like take 20% off, or just like pull back, try something new, um, then you're not going to continue enjoying that thing because you don't stay the same person.
Right,
It's a funny thing, right? We decide what our jobs are when we're like 17.
right.
That's about when I decided to become an architect. You're not the same person every 10 years or so. I mean, you're a completely different person. So this idea that if you just pick the right thing, you'll be good forever, I think is kind of a fallacy. And so, and especially once you start getting a little older, and this is like the classic midlife thing, right? Everyone reaches midlife and they start having these massive realizations. Some people have a really unhealthy sort of reaction. They get divorced and buy a drop top and start cruising around being idiots. But I think where that stems from is just at the halfway point, you realize that you have the is this it moment. Like, retirement is not very attractive to me, and I certainly don't want to have to wait until I'm in my mid 60s to enjoy some of the benefits of retirement.
Yeah,
And so if you don't now, think about personal sovereignty, personal freedom, it just won't ever happen. You know what I
yeah,
mean? Like that's the
yeah,
thing. Like freedom doesn't just happen. It's not
yeah,
just if you keep going to work, you keep working your Outlook, you keep going to the
yeah,
meetings that one day they say you're excused and we'll keep paying you. You know what I mean? So you have to take authorship of your life. And if you want to experience personal sovereignty, and personal sovereignty means you get to show up at the kids' games, means you get to travel more, means you get to be a better husband, means you get to be a better employee, right? Like I
yeah,
think most people, if they could just take off a little bit off the gas and just
yeah,
work a little less, they would actually do a better job.
yeah,
So I think it's just something that we all have to prioritize for many reasons. And I really think multifamily investing, but really private equity and just
yeah.
investing for cash flow is a great way to get started.
Excellent. Love it. So do you have any last pieces of advice for our audience, whether that's a medical professional, realtor out there, accredited investor, maybe? What are some last pieces of advice you'd give if to going after that freedom and that personal
Yeah.
sovereignty?
I think we're so used to thinking of investing just in terms of assets out there in the world, whether it's stocks, real estate, gold, whatever. But the idea of investing in yourself is something that I think we don't talk about enough, especially people who only think of investing in yourself as like, oh, I got to go get another degree or certificate or
Right.
what have you. But reading the right books and joining the right masterminds, finding the right coaches, I mean, the ROI on that can be near infinite, right? I
Yeah.
mean, you can join the right group of people who are like-minded, starting from a similar place, or maybe, there's a few people who are 4 steps ahead of you who can just tell you, don't do that. I did that. Try this instead, and guide you. It's incredible how far you can get. And it's incredible how much people want to share that information.
Yeah.
Truly successful people want to share the story of their success, and they want to help other
Yeah.
people. So
That's interesting that you responded to that question so the question that I asked was in regards to basically limited partners, people that want to invest passively, that want to be hands off. And your answer was increase your knowledge, go to the masterminds, increase your networking. That's interesting you say that as a response to the passive investor instead of an active investor. So like, yeah, we hear that all the time. If somebody that wants to jump into real
mhm.
estate full time and own and operate the properties, be the operator, be the general partner, yeah, you need to get educated, you need to have the networks. But it's really interesting that you say that for a passive investor.
Mhm.
And just let that sink in. When have we ever heard somebody tell a W-2 employee, load up your 401k, you need to match what the company is, and start learning about stocks and start going to networking meetings about stocks and the stock market? They don't ever tell you any of that. They just say, put your money in there and
Yeah,
blindly within 40 years when you retire, you're magically going to have something. There is no
totally.
educational in that. It's just trust the system and just do
Yeah,
your job. But your answer right now is no, you need to learn about real estate. You need to read the books. You need to that's phenomenal. That's a completely different mindset.
yeah. And listen, everyone to some extent is talking their book, right? So if you talk to your financial advisors or you Google about Fidelity, they spend a ton of money on their marketing to make sure that you think the only smart thing to do is to just park your money with them for
Yeah,
your entire life so
yeah,
that they can
yeah,
just like skim fees off the
yeah,
top
yeah,
without even doing much, right? So you just have to realize that, and it's the same when you get into active investing. There are going to be GPs of all types of assets who aren't out to educate you. They're just like, oh my gosh, we're going to promise you the sky. Just throw your money at us. You don't even have to think about it. And my advice is always think about everything. Question everyone. Question your financial advisor. Question the people that are asking you to invest with them. This is the game. In some sense, there is no such thing as a passive investor. That's just a
yeah,
tax designation. That's
yeah,
just like a phrase that
yeah,
has to do with how everything works on the back end. But like the reality is, if you make a mistake, you can't say, "Oh, I should get my money back. I'm just a passive investor." You know what
right,
I mean?
right.
Like you have to be educated. And this is in some ways one of the big games in life is like how do you use your mind to make more money rather than just showing up and trading your time. So
Yeah, love it. That was great advice. Finishing up this podcast. So where can the listeners and the viewers find you at?
yeah, so our website is upwealthcapital.com. We've got lots of information and resources there. My name's Schuyler Cadwalader. I won't spell it for you, but luckily I'm very Googleable. You can find me on LinkedIn. I'm pretty active there. And yeah, those are great places to get started.
Excellent. Well, thank you so much, Skylar. And this is a wrap for the latest episode of the Wealth Building Strategies podcast.